Welcome to the Trending Report, brought to you by USA Financial. The Trending Report is a series that aims to focus on the trend lines rather than just the headlines. Each episode features commentary around the state of the market, as well as other factors that may impact your personal finances. The host of the Trending Report is an investment advisor representative of and securities are offered through USA Financial Securities, member FINRA SIPC, a registered investment advisor. The Trending Report is educational and not intended as personal financial advice.
Welcome back to the Trending Report. With America turning 250 years old, in this episode, we're going to take a look at what the trends were in pop culture and what was going on in the stock market since the birth of the nation. In the early decades, American culture began carving out its own identity with homegrown literature and traveling theater. By the 1830s, the penny press disrupted everything, making daily news and satire accessible to regular citizens just for 1 cent. Financially, Wall Street was officially born with the Buttonwood Agreement in 1792. Quickly, capital flowed into highly speculative canal and bridge and early rail stocks. Without this regulation, though, this early mania led straight to the Panic of 1837, America's first multi-year depression. As we moved into the late 1800s, industrial expansion took over. Culturally, Americans became obsessed with cheap dime novels about Western frontier, high society fashions paired with organized sports, and a massive nationwide bicycle craze. On Wall Street, speed became everything. The invention of the telegraph network instantly linked regional tickers directly to central trading desks, eliminating information lag. We saw massive capital spikes from Civil War bonds, issuance alongside infamous market cornering schemes. To bring logic to the chaos, Charles Dow introduced the first market indexing tracking average in 1884. This brings us to a period of intense cultural and economic friction. The 1920s brought a massive generational shift. We saw the rise of jazz, underground speakeasies, and short flapper fashions that upended traditional society structures. Mass media exploded as audio shifted from regional ragtime to mass audio syndications, and cinema transitioned from silent Nickelodeons to Hollywood talking blockbusters. But this booming culture masked a dangerously fragile financial foundation. There was retail margin mania, where the cultural roar created immense speculation. Loose credit accounts allowed everyday citizens to speculate heavily on trust assets using borrowed money. And in 1929, the music stopped on Black Tuesday. The historic crash triggered the Great Depression, forcing the federal government to implement defensive laws like the creation of the SEC to protect the public. Post-World War II America shifted into global integration and institutional scale. Culturally, entertainment moved into the living room. Televisions replaced legacy radio systems. Youth purchasing trends began dominating the economy through the rock and vinyl explosion of Elvis and the British Invasion. By the 1980s, this accumulated into the MTV generation, where highly visual music videos permanently redefined fashion, marketing, and the corporate aesthetic. Wall Street kept pace by going global and digital. Post-war framework anchored global values to the US dollar, lifting middle-class equity buying. And with the introduction of the NASDAQ in the 1970s came electronic trading and eliminated the fixed broker commissions fees. This new electronic landscape faced a harsh reality check on Black Monday, 1987, when a massive single-day collapse highlighted the hidden risk of early computer program trading. This brings us to our modern era, leading right up to our present day in 2026. Culture today is defined by hyperspeed and algorithms. We've evolved from the early residential internet connections and bulky cell phones to smartphones and data streaming. Pop culture is dominated by massive, multi-decade cinematic universes, while everyday media has shifted to short-form algorithmic video channels like TikTok and widespread integration of generative AI in the workplace. Naturally, the stock market mirrored the shift perfectly. We've weathered highly destructive tech-driven bubbles from the 2000 dot-com crash to the 2008 subprime crisis. The rise of passive ETFs and commission-free phone apps completely democratized retail trading. This has created our current market environment where Reddit-fueled crowd mechanics and meme stock cycles actively balance out the mega-scale artificial intelligence bull runs. As we look back at 250 years of American history, the overarching lesson is clear. Pop culture and the stock market are completely intertwined, from the penny press and the canal stocks in the 1830s to TikTok and AI rallies in 2026. Whenever technology makes information more accessible, culture shifts, and the stock market experiences a massive wave of retail democratization and speculativization. Recognizing this rhythm is what helps us stay grounded as long-term investors. Thank you so much for your time today, and as always, stay curious, stay disciplined.
Thanks again for listening to this episode of The Trending Report, powered by USA Financial. We invite you to visit usafinancial.com to find out more about our work with independent advisors and their clients all around the country. Any projections, targets, or estimates in this report are forward-looking statements and are based on the firm's research, analysis, and assumptions. Due to the rapidly changing market conditions and the complexity of investment decisions, supplemental information and other sources may be required to make informed investment decisions. All expressions of opinions are subject to change without notice. Clients should seek financial advice regarding the appropriateness of investing in any security or investment strategy discussed.